Alright, dear friends, this is the second part of the series on the Ichimoku indicator on the Binary Skills channel, where I'm here to assist you. In the first part of our Ichimoku indicator training, we went over the different components of the Ichimoku system. I introduced each part to you and explained what each does, how they are created, and their practical applications. I highly recommend watching that video first if you haven't already. It's essential to watch my tutorials in order step by step to fully understand the Ichimoku indicator. Then come back here for the second part to fully grasp what we're discussing. In this second part of the tutorial, I want to focus entirely on the Chiku span. As I explained before, the Chiku span is represented by this purple line. I've made the other lines on the chart a bit less prominent, reducing their thickness so this one stands out more clearly. The Chiku span, as previously mentioned, shows the closing price from 26 periods ago. In simpler terms, it displays the closing prices of the candles from 26 periods earlier, providing us with an average of those prices. Well, there's a point I mentioned in my previous video about how we can draw a trend line on the Chiku span and use it to generate signals. The method is similar to how we draw a trend line or channel on the actual candlesticks. We can do the same thing on the Chiku span chart. The approach is to draw these lines on both the small waves and the smaller peaks and valleys, as well as on the larger ones that have been formed over a longer period. To make it clearer, I'll draw this channel here. You can consider these peaks and connect them, but it's not always necessary to be precise. Alright, if we consider something like this, we had a support level here, and then we see that the price went up, the candles moved up, and we had some fluctuations. There was another reaction around this trend line, and it continued to fluctuate up and down. Eventually, the Chiku span broke this trend line from above, leading to a downward trend. So, when this break happened, the trend turned bearish. The opposite applies to the peaks. If the Chiku span line breaks the trend line from below, it indicates a bullish trend. As we can see here, there were several reactions to this trend line, but it couldn't break through. If the line had broken above here, we would have seen the candles move up and continue to rise. This is an example of how to get a signal from the Chiku span line. As you know, and as I explained, it shows the closing prices from 26 periods ago, meaning the Chiku span line is somewhat behind the candles because it displays data from 26 periods back. So, where this break occurred corresponds exactly to where the candles started to decline. And as you can see, exactly where this candle is, approximately 26 candles before that, is where the Chiku span line begins. This is a method for getting signals from the Chiku span line, which I briefly explained in the first part and will elaborate on in this video. I also want to add another point. We can use the Chiku span line to draw SNR, support and resistance lines. We can identify areas where peaks or valleys have formed and draw lines on the chart at these points to assess their strength and effectiveness. For example, if we see a peak or valley here, or where there was a reversal, we can draw a line on the chart. We try to draw these lines at points where there have been multiple touches. For instance, I consider this area to draw the line. Now I think it would be better to draw a line right here at the bottom. As an example, I'll draw a line between these 2 points to see how it responds. I won't be too precise because it's not that crucial. We just want to test something. Now, if you allow me, I'll remove the indicator completely. We want to see if the support and resistance lines we've drawn hold any significance. Starting from the top, as you can see, there's been some reaction here. A shadow of the candle hit the line and bounced back. Here we had another reaction and again another reaction. Here we had another reaction and again another reaction. There was another response. The red candle's shadow touched the line here, and similarly we see other reactions. This suggests that the SNR lines we drew seem to have some validity. And now let's check the second line. Here we had a trend change. As you can see, the line was broken here. We also had 2 reactions and 2 trend changes on this second line. Similarly, around here it came close and then reversed. Again, when it broke here, there was another trend change near this line. On the bottom line, we see the same thing. There were 2 trend changes exactly on the line, and even though there was a bounce here, it eventually broke through. So, this is a method of drawing support or resistance lines using the Chiku span. In the upcoming parts of our tutorial, I'll explain how to draw SNR lines more accurately and professionally using the Ichimoku indicator, so you can do it more precisely. But this is one way to do it using only the Chiku span. Now, if you allow me, I'll bring back the Ichimoku indicator to continue our explanation. To make it clearer, I'll reduce the thickness of the Tenkan-sen and Kijun-sen lines so the Chiku span is more visible. The first thing to discuss is the behavior of the Chiku span in relation to other components. The Chiku span interacts with the candlestick such that whenever this purple line crosses the candles, we expect a trend change in the same direction. For example, if it crosses the candles from above to below, it signals a potential downward trend. As you can see here, it crossed the green candles from above, and then we observed a decline. Conversely, if it crosses from below to above, it indicates an upward trend, like here where it crossed from below and an upward movement followed. This is generally the characteristic of the Chiku span. When it crosses the candles, the market tends to move in that direction along with the candles. However, there's a very important point to note. Our Kumo clouds, whether green, up Kumo, or red, down Kumo, act as a support or resistance level regardless of their color. What does this mean? It means that the cloud here acts as a resistance pushing the candles down. Conversely, when the candles break through the cloud and move above it, as you can see here, the candles moved up and the cloud acted as a support. Again, here it provided support and the cloud generally acts as a support or resistance. So, what do we conclude? When taking signals from this method, we should align with the cloud. This means that when the Chiku span crosses the candles from above to below, we can only enter a trade if the cloud is above the candles. If the cloud is below and the Chiku span crosses the candles, the cloud acts as support, making it riskier to open a short trade. The best scenario is when the cloud is above, providing additional resistance and making our signal stronger. Here you can see that the Chiku span came down from above and crossed the candle downward with the cloud behind it, meaning the cloud was above the candles. We can see how this led to a significant drop. However, if the cloud had been below in this situation, entering a trade would have been riskier, although it does happen sometimes. For instance, as seen here, the Chiku span crossed the candles from below to above, with the cloud above providing resistance. Despite this, an upward movement still occurred, but it comes with higher risk. The best scenario for our trade is when the cloud is behind, meaning the cloud aligns with the Chiku span, allowing for a more confident and secure trade. So, to reiterate, if the Chiku span crosses the candles downward, the Kumo cloud must be above the line for a safer trade. And if it crosses the candles from below to above, the Kumo cloud should be below the candles. Even if the Chiku span crosses inside the cloud, we shouldn't trade. Whenever we see it breaking inside the cloud, like in this part or here, we avoid trading. Always keep in mind, friends, not to trade within the cloud. That covers the behavior of the Chiku span with the candles. Now let's see how the Chiku span interacts with the Kumo cloud itself. The behavior of the Chiku span with the Kumo cloud is similar to its behavior with the candles. If the Chiku span starts moving and breaks through the cloud completely, like here where it moves up from below the cloud, we can see that it leads to an upward trend. Conversely, if the Chiku span breaks downward through the cloud, as seen here, it indicates a downward trend. So whether the Chiku span breaks through the candles or the cloud, the trend will generally follow in the same direction. For the future of this chart, if the Chiku span moves upward and breaks through the candles, we can expect an upward trend. However, since the cloud is above the candles and this line, trading in this situation is somewhat risky. It would be safer to trade once the Chiku span breaks through the cloud as well, ensuring a more secure and confident trade. Alright dear friends, the Chiku span line behaves similarly with the Tenkan-sen and Kijun-sen lines. Let me demonstrate this on the chart where these two lines are also highlighted. Specifically, whenever the Chiku span crosses the Tenkan-sen and Kijun-sen lines, the trend continues in that direction. For example, here you can see the purple line, our Chiku span, first breaking through the candles, then crossing the Tenkan-sen line, and finally breaking through the Kijun-sen line. As a result, we see a downward trend here. It even breaks through the Kumo cloud downwards. And if you pay close attention, you'll see how far the market fell after this, resulting in a significant downward trend. Conversely, the opposite is also true. Here, the Chiku span has crossed above the candles, then the Tenkan-sen and Kijun-sen lines, and the Kumo cloud all moving upwards. This gives us a very strong signal, indicating a strong upward trend that followed. Now looking at the current market condition, we see the Chiku span breaking below the Tenkan-sen line after crossing the candles. If it continues this path and breaks the Kijun-sen line as well, we can expect a potential drop. If it crosses through the Kumo cloud, we may witness a very powerful downward trend. Let me show you another example. Here, the Chiku span crossed above the candles, then the Tenkan-sen and Kijun-sen lines, indicating an upward trend. When it eventually crossed through the Kumo cloud as well, we saw a continued upward movement. Similarly, in this other instance, the Chiku span crossed the Tenkan-sen and Kijun-sen lines from below and moved upwards. And when it successfully broke through the Kumo cloud, we observed a sharp, powerful downward trend forming in the market. Wherever the Chiku span line is, if I want to explain it more clearly, it's somewhat similar to the RSI that we see on the chart itself, not on a separate chart. And whenever it breaks through any of these components, the likelihood that the trend will move in that direction increases. However, we must be sure to pay attention to whether, for instance, when a break occurs, the Kumo cloud is not above it, as it has a resistance property and can resist the upward movement in price to some extent, making our trade somewhat risky. As you can see, the market became range-bound and stabilized until it broke out of the Kumo cloud, resulting in an upward trend. This is a very important point and it's quite clear. The Kijun-sen line was broken, but the Kumo cloud above it provided resistance, causing a slight upward movement. However, the market remained range-bound, with the candles fluctuating within a range, showing alternating green and red candles. But here, when the Chiku span managed to break out of the cloud and move above the candles, we see a significant upward trend forming. Alright folks, I'll wrap up this part here. I've explained everything you need to know about the Chiku span. In the next part, we'll discuss the important relationship between the Tenkan-sen and Kijun-sen, which is very crucial. We need to understand how they affect each other, the different patterns that form, and what to expect in the market following each scenario. Be sure to watch the next part as it covers some very important topics. Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.